Hello, this is Gordon from Metaverse and Crypto. We're going to get into a crypto market breakdown here, looking at the October pullback and a whale shortage risk. So, crypto just hit turbulence after a euphoric September that pushed Bitcoin past 125K. We're currently looking at a market cap near around 4 trillion. Bitcoin market cap has at about 3.95 trillion, if you can see here. And we October brought a sharp pullback, but is this the start of a deeper correction or is this a healthy reset before the next leg up? Let's break this down and look at fundamentals, the risks, and stick with us for the huge news about a 209 million BTC short that could trip the market. So as we look here, Bitcoin retraced from 125K. Let's take a look at the chart here and pop this open on the daily. It retraced from 125K all the way down, it went down here to 104, but it kind of settled in around at 110. That's where we went to. We still have altcoins, so even deeper drops with Sol and AVAX down double digits, and things like Doge, everything went down to 8 cents and stuff like that. So the ETF euphoria has cooled as the SEC has delayed several approvals. The Fed's 25 basis point cut was already priced in, and the dollar stayed stronger than expected. And now, with the recent news by Trump on the geopolitical tensions that create regulatory uncertainty, add fuel to the fire. So this isn't a rug pull; it's a repricing, but there's certain critical levels we need to look forward to. So, despite the volatility in the macro setup, still favors crypto at this point in time. But the ETF spot approvals are still likely in the fourth quarter with massive inflows expected. The Fed is dovish and real yields are falling, and this is bullish for real risk assets. So whale accumulation continues, still in that 107 to 110 support zone. Solana and Ethereum are seeing institutional inflows and new digital assets in their treasury. And this isn't 2022. The infrastructure is stronger, capital is deeper, and the narratives are more mature. So we see a little, with dollars and BTC, we see less fluctuation, but we still see huge price spikes that can happen as we've seen. So now but let's be real, there is downside risk here, as we talked about at the start. So the regulatory overhang and these delays are on the ETFs could trigger another downward leg. The macro shocks, the surprise inflation print on the dollar spike could hit liquidity, and then over leveraged alt positions and liquidations, as we've seen with this big candle that happened over here, could happen to push this down. And if BTC breaks below the 107 range, this line right here, where the 200, that white line is a 200 EMA. This could, have a lower impact on us as we go forward. Now, what do I want to show here? I got this as part of the kicker that's confirmed a short by on Hyperliquid, which now totals over 209 million with a recent 200 BTC addition into the entry price. This is just a picture from somebody who I trust in providing information, and it's a Hyper Signals, but this isn't the full one. It's been reported in other areas as well. So they got an entry price of 116,000. It isn't speculation. It's been tracked by multiple analysts and reported across multiple media positions. So take a look for this one, get some more information on this. But if BTC slips below 110, this short could become a self-fulfilling spiral going forward. So here's what I'm watching going forward. The October 29th FOMC meeting, any hawkish surprises could shake the markets. ETF decision windows, especially for ETH and multiple asset products. Looking at on-chain flows, whale wallet, stable coin inflows, and miner selling. Look for those if you're tracking those. And then altcoin rotation. Watch for strength in the L2s and the real yield in DeFi. So it's a trader's market, but long-term fundamentals still favor conviction holders. Right at the point, say we got to watch for that breaking point. So in closing, October's pullback might be just a healthy retest, but let's not get complacent out there. Fundamentals like ETF inflows, dovish Fed policy, and institutional accumulation still support a long-term thesis. But if Bitcoin fails to hold that 107 critical support zone and it breaks down to 98 to 96, we're no longer talking about a dip. If it doesn't hold that 96 to 98 position. 98 has acted as a psychological level for months, and a breakdown there could trigger broader liquidations and unwind leverage. And 96 is kind of where the CME gap is. So if you get down in here, this is where things can break down even further, and they could go, where's it going to go down from there if we don't hold that level? So watch the 107, 96 to 98. And go from there. So we're looking at that. So while conviction matters, there is caution. And this is not financial advice, just bringing you the information that I see, and make sure you do your own due diligence research. Stay liquid, stay hedged, and keep your eyes on levels that matter here going forward. This is Gordon for Metaverse and Crypto.